Hello everyone, welcome to today's trade setup video for the 1st of September. I hope you had a fantastic expiry day today. And let's get started with Bank Nifty and see what happened today, and also explore what will be the likely scenarios, what can be expected on a Friday. Especially Fridays are becoming too difficult to trade in the first half also these days. So let's explore how we can go about it. So first, let's have a view of what happened today. You see that there was a good bounce back after the first, initial fall. The Bank Nifty actually rallied up, and then it also made a doji. And at this juncture, it felt like it's going to further go up, and then all these levels, this red zone, which I keep mentioning it as the power zone. Once it clears this, I was expecting some sort of pull from here and then go upside. But like I also mentioned in yesterday's video, market has been in a bearish territory. They have also broken 42, 44, 300 and trading below. So which makes it very difficult for any further up moves. So I said this is going to be a very big barrier in the live stream for it to clear. And immediately we saw that it came in three successive candles to test the edge of this power zone. And again here I was a little bit concerned whether it will hold or it will retrace back. But subsequently, after a couple of candles, this is 15 minutes candle, almost like an hour later, it clearly Bank Nifty broke the level and again consolidated and then made a low of around 43 895, right? So from there on, it never entered into the zone, almost like trying every time it made an effort to enter in, it got rejected. And last candle there was some sort of short covering. Mostly I would say this is not a short covering, this is like a rollover, which is why you see an extraordinary amount of volume over here. Otherwise, in the past you will not see any sort of candles like this. These sort of accumulations are only on the month end contracts that you will see, because they are rolling over the positions. So unusual quantities you will see this way. This is not really a short covering, rather a rollover. So what to read of this? Although it gave a positive start, it was trading yesterday, it was trying to hold up to the top side of the power zone. Today it closed below the power zone, making it even more bearish, right? So should we straight away jump into the puts tomorrow? Not necessarily. We got to see how the fresh month contracts opens, and then whether bulls are having a different game plan. Maybe they give some sort of gap up above UT3, and then it continues to go up. Then it's a very serious concern. So you never know. Whenever any set of monthly contracts gets over, the subsequent day we should wait for proper confirmations, and we are at a juncture where it requires extreme caution in the first half to determine where the market is heading towards, right? So don't jump into any sort of position in the opening trade. Wait for absolute clarity in terms of OI data, in terms of patterns, giving some sort of breakouts. So the biggest challenge for bull side would be like to clear this UT2 level and break this 44,300. So I expect naturally if the market opens flat, then there is no momentum on either side. It has given a flat opening for first 15 minutes. It's not giving any sort of breakout. Let's see how it plays out. Supposedly market goes up to UT1 gradually, and then it gets rejected. Then we should wait for some more time. And I would be considering entering directional play at UT2 levels or at 44 300 levels. They are basically close to each other. So around this 270 to 300 is where I would be looking to enter into the put side. And I will not be playing any weekly positions. From here on, I'm going to play only month-end contracts. Reason being, these are extreme decision points, and then any side it can go like 500 points to 1,000 points. So that is why I'm not writing any positions. I have kept, today was the only day I have taken some writing positions which I carried. Otherwise, for last whole week, I did not carry any positions overnight, right? So it's going to be very difficult to assess which direction the market is going to head until we have some sort of, proper breakout. So here, what I would suggest is that those who are writers don't even think of doing any sort of positional writings unless you know how to edge. Probably you might have to edge and roll those positions for with three adjustments or four adjustments, because there could be some massive breakouts from this point. So writing is very least effective, strategy at this juncture. You should not be trying to write any positions at this point. If we have to, consider buying, then definitely we should be considering this UT2 levels. This is where you should be considering entering into the puts, and possibly, once it clears this 300 levels, then you may have to stop buying options, buying put options. You should, just ignore that, because after this you might have some sort of, upside rally. If it is a short covering rally, it's going to be super fast. So puts till the levels of UT2 you can enter, and then see how it is getting rejected or it's getting, turning bullish. Collaborated with OI data, and then the momentum, how it is, getting pulled up, basis which the puts should be exited. Otherwise, if you enter over the put here and then it comes down, then easily you can wait till the levels of pivot. That is quite normal. At the same time, if you're, looking for some downside actions, say that there is a flat opening, or it starts going down, see if it is, breaking the day's low. This is the day's low, right? If it breaks this, then we might see further more down moves to the levels of LT3. And once LT3 is broken, then all these targets gets activated. It can reverse from this point. If it comes here, LT4 can be a reversal point, LT5 can be a reversal point, or LT6 can be a reversal point. But since the momentum is on the downside, all these targets are open once it breaks LT3. So the bearishness plus inability to hold this zone, and also, breaking LT3 is a very good confirmation for us. So LT3, once it breaks and couple of candle sustains below, then you can, expect it to the levels of LT6 as well, which is 43,400. That would be a massive breakdown, right? And positionally we are bearish. So that's the view for Bank Nifty. For writers, I wouldn't recommend anything at this juncture. Let's see how, because as a writer, you got to do plenty of adjustments, which is not worth doing. Rather, you can play directional writings, in the sense, suppose we are expect if the market goes here and then you wanted to play directional writing, maybe you can write something like 44,500 call side you can write, because buying a put and writing a call are all same, right? So you can do that and then play directional writing. That is what I would suggest. So whatever I have told for buyers to do, you can do the opposite of it by writing the, if a put is to be entered here, then you can do a call writing of UT4 targets or something like that. If it is, going to go down, like breaking LT3 again, you can again uh, do call writings of LT1 or something like that. If you are expecting some sort of reversals, then, put writings can also be done. Like when the market is trading at LT5, you can go ahead and write LT7 targets, something like that you can plan. And tomorrow, I feel that there is a lot of buying opportunity. I will not be looking too deep into the writing part. Maybe towards the end of the day, I might take it, depending upon where it closes. I will take some sort of, weekend positions. That is mainly for, collecting over the weekend some profits due to theta decay, right? Other than that, I will not be doing carrying much. That too, I will consider only towards the end of the day, where the market is trading basis which, right? So this is the way for Bank Nifty. Let's explore Nifty quickly. Nifty is also like consolidating between the ranges. You see these two zones. It's trading between that for some time. And clearly the momentum has shifted from bulls to the bears. Now each day they are making some sort of gradual descent, and it has penetrated into the zone now. Clearly, it has entered into the zone and closed over here. Closed slightly above at the last moment. There was some sort of short covering or maybe push and roll over that brought it above the zone. Otherwise, it was deep inside this zone. You can see that it has pierced and then made a new low of the recent times. So clearly there is a bearishness. Like I said, same thing. The same principles of Bank Nifty applies to Nifty also. Here, since Nifty's volatility is very different from that of Bank Nifty, I would suggest that on the lower side, if it breaks LT1, we are in for a more bearish moves. If it takes one more support and then it bounces off, then we can wait to see. So as soon as it enters into this zone, you can get into the call side of the trades and then keep LT1, UT1, UT2, UT3 as targets. Slowly trail it and follow. But the moment LT1 is broken, just think of squaring of the position, because you never know whether it is going to further get pulled up or it's going to break down. Because there are times where it has broken and then two candles it played on the downside, and suddenly it third candle or fourth candle it rallied up. To give you an example, here we can see that this is the first candle in Bank Nifty, and then quickly it rallied in the second and third candle, right? Similar things are also possible in power zones. Doesn't matter which index, the moves will be terrific, and it's a new month. So play extremely cautious. And for me, I don't do Nifty, but still, what I feel is that anything you see, or if there is any sort of gap down without breaking LT1, if it is somewhere here, I would see that as a buying opportunity for the calls, because since this level is holding up pretty strongly, you can do morning trades for upside call side. But if it is already opened below LT1, then it makes no sense to get into the call side. Just ignore it. But wherever you are going to play in next month end contracts, at least for tomorrow alone. Monday we can get back to the weekly expiries, but Friday, tomorrow alone, I am saying that we should be playing in month end contracts. Reason is pretty simple. New month has opened, rollovers have happened, and people will be thinking, devising some strategies. The big players are devising strategies. Some of them would have lost big, some of them would have made extreme big kill. So they will be thinking, how do I maximize my profits? Somebody will be thinking, how would I, get my losses, recover my losses? So all these big guys are, making some sort of plans and coming up with some sort of strategy. And usually the volatility on the Fridays following the monthly expiry will also be sometimes super crazy. So you enter into a wrong side of the trade, it suddenly moves some 150 points, or in Nifty, if it moves, say, about 100 points, it could be very costly, right? You don't want to start off a new month with some big losses. The safest thing to do is to secure your capital by getting into longer expiries, that is month-end contracts. So keep this in mind. Don't even go for next week contracts. Always stick with month-end contracts only for tomorrow, right? Monday we can see what can be done. But for tomorrow, let's stick with month-end contracts. So what are the game plan? If you already see some sort of gap up opening at UT1 or UT2, some sort of strong moves have been witnessed, then comfortably I would be going into the puts. Reason is that the momentum has not shifted. UT2 levels means I will be able to get the month-end contracts premium at a very, very cheaper price. I will without it, for me it is a no-brainer, but I won't go aggressive. Maybe some 5% of the capital I would deploy around these levels, and capture the opening trade. Maybe you capture some 20 points, 25 points. That's good to start. And with that, you keep adding every trade, some small, you know where it is getting rejected. The first 15 minutes candle will help you understand where it is getting rejected. Then it makes us to make well-informed choices, right? And that's the update. As a writer, again, no writings for tomorrow. As a buyer, play month-end contracts directionally. and breaking of LT1 will be very difficult. And if there is any sort of gap down opening breaking, then it's going to be a wait and watch game. I will be more bearish in that case. If it is opening flat and then taking a support here itself, I will be entering into the calls. If it's a gap up opening around UT1 or UT2, first P I will enter here. Second averaging I will do here, and maybe even till the levels of UT3, but then it will be staggered 1 to 2 4 ratio investment. Suppose I buy one lot over here, this will be two lots, this will be two lots, and here I will go for four lots, so that my average is close to the over here or somewhere here. When there is a small fall also, I will be in profits. So that would be my strategy for tomorrow. And please do join the live stream if you want to know further live updates of how to go about it. And hope we have a fantastic start to the September month. Wish you all the very best. Thanks.